Good day. Welcome to another episode of Analyst Insights, your plug for everything economics, investments, and finance. I'm your host, Rufaro, and I'm joined today by my colleague, Ranga.
Thanks, Rufaro, for having me today.
Today we get to start the show with some good news. We've moved from level 4 to level 2 in terms of the COVID restrictions or lockdown. It seems that cases, hospitalizations, and deaths are trending in the right direction, and we might be exiting this level, this third wave. What does this mean from a macroeconomic perspective and for our capital markets?
Thanks so much, Rufaro. It's good that it's coming on the back of improvement in terms of the numbers of infected people and also deaths on COVID. So I think that's the first bit of good news that we have made some good strides in terms of containing this outbreak, especially for this third wave. So obviously on the economy, you need to have less restrictions. So business hours have been increased by about 3.5, and it means a lot for most businesses. I just look at the retail businesses as an example. If you are restricted to be operating up to 3 p.m., it means you actually are missing out on the peak hour kind of trading time. So maybe from 3 p.m. to around 7, some of the people do their shopping when they're just leaving their offices on their way home, and there's a lot of maybe last minute buying that takes place. And when you just look at the numbers that were coming from companies, especially the listed ones, in the last 18 months, you get a picture which shows that whenever the lockdown was there and it was tight, obviously volumes were coming off in a big way, because it also means a drop in aggregate demand, because generally the populace don't have adequate spending power, but also the trading hours are restricted. So I think part of the growth that we're seeing on some of the businesses, their volumes were coming at times whenever the lockdown measures were lifted. So it's actually quite good. One certainly hopes that this actually goes all the way into December and maybe early next year, or maybe we are off it completely, because we're actually getting into the shopping season, if I could put it that way. As you're approaching the fourth quarter, that's where most of the activity tends to happen. Either people are buying for the Christmas holidays, but also preparing for the new agriculture season. So that tends to be a very active period in our economy. So this is quite some progress, and it was necessary to support other areas that had been opened up. For example, schools were opened, and school children needed to move, and also there were some other supporting services that were needed to make sure that the reopening of the schools will actually move on smoothly. So this is good, and it's actually quite positive even for our markets, and as it affects the performance of the listed companies.
Unfortunately, our next news item is not so positive. The monthly basket of goods for an average family has gone up almost 5% to $41,000. So it looks like the trend in inflation, where it was coming off, is starting to reverse. What are your thoughts on this?
Yeah, look, I think we'll continue having a problem with inflation as long as we have got Zim dollar operating alongside the US dollars, because you've got a scenario where the major components or the cost for some of the businesses are coming through, are rated at the black market rate, and it tends to push up the prices every now and then. I think recently there was an article where exporting businesses, including those that are in mining, were actually appealing to government to do something about the retentions, because they are forced to liquidate 40% at the auction rate. But then the cost of operating, most of them, like the local ones, they're actually rated at the parallel market rate. So it just tells you that the interplay or the the interplay of the US dollar and local currency economy is actually pushing up costs on certain lines, and those costs are actually being then pushed again to the customers in form of the high prices. For us to have proper stability, I think we need a scenario where transactions that are taking place in Zim dollars are becoming less and less, to a point where there is no pressure on the suppliers for them to be adjusting prices every now and then. So I think the inflation, we're done well in terms of containing it to this level, but if we keep maintaining this auction rate at 85, we'd get to a point where unless most transactions migrate toward the US dollars, the inflationary impact will start coming through, being driven mostly by the currency movement on the parallel market, right, where the rate is probably right now approaching 160, but on the auction rate, on the auction market, it's still at around 85. I think that has been the source of the inflationary pressures that keep coming through every now and then. So that's the problem. So I think there's need for that clarity, or maybe just make a pick and say we want to go with the US dollars and relegate the Zim dollars, because even government, they're also super excited about collecting most of their revenue in US dollars now. I think probably they are collecting in excess. They collected more than 700 million US dollars in the last 6 months, and towards up to the end of the year, it could be figures way above $1 billion, definitely. So if that is where we are, what's the point of keeping this idea of having a Zim dollar when predominantly the economy is becoming dollarized? It's only creating more problems for everyone.
So you touched on the issue of retentions, and we saw earlier in the year there was an incentive structure put in place for mining houses, which you also touched on. If they list on the Victoria Falls Stock Exchange, they will be able to retain 100% of their incremental exports. So Padenga was quite decisive. They moved very early on to delist from the Zimbabwe Stock Exchange, to move to VFX to take advantage of this incentive. So we have one of our biggest mining houses, Zimplats. It's a platinum mining operation. They are not listed anywhere in Zimbabwe, but they're listed on the Australian Stock Exchange, and they reported significant revenue growth. They reported more than 500 million US dollars in earnings.
Profit,
yeah. But we haven't seen the big platinum mining houses like Zimplats, like Unki, like Mimosa make moves towards listing on the VFX and taking advantage of these retention incentives. So what do you think is holding them back? Why have we not seen many more mining houses and possibly other exporters in maybe in the agriculture sector and other parts of the economy rushing to take advantage of this 100% incentive on incremental exports? What do you think is holding them back, and perhaps what changes can be made to the policy framework to get these guys on board?
So I think the biggest issue is maybe one would ask that, does the VFX have capacity to support fundraising, capital raising by these companies? So if any one of those mining entities that you've mentioned was to list on the VFX, and maybe they want to raise even a small amount like 20 million, where do you expect that amount to come from? Certainly it can be from the local institutions. I think for most of them, maybe they are beginning to earn some bit of US dollars as the economy is becoming more dollarized, but I think most of them, their incomes predominantly in Zim dollar terms. And so definitely those ones won't have the capacity to support any capital raising. And then we have to look at the foreign investor. But right now you've got a scenario where the foreign investor is actually moving out of the ZSE. And when you speak to them, I think the most common thing is that they've endured some years of unfavorable policies. So they're actually running away from a policy environment. So I think what needs to be done is for us to have a policy environment that actually can attract investors back onto the market. And I think investors will be more excited about VFX, assuming that we have got a good policy environment, because it then means they can have exposure in Zim assets, but without the foreign currency risk. That's why around 2010, 2011, we saw quite a number of these foreign entities coming onto Zim, because they liked Zim exposure. They saw huge potential, yeah, huge returns that they could earn, but they were doing that in US dollar terms, so they didn't have this worry where you see in other emerging or in frontier markets where you have to deal with weak currencies. So there is that potential, but I think the policy environment is not one that is capable of attracting monies from outside. So it's not so much about just creating a market, but it's the environment. Is it favorable? Can you right now, if you are to engage with some foreign fund or institutions, would you confidently invite them to come and invest in Zimbabwe? And if they had asked you that, okay, if I want to move my man out at some point, um, is that possible? With this, what we're hearing, that maybe the backlog is huge, even on the auction market, probably running into 300 or 400 million US dollars, and there are so many guys who are on the queue to try to take their money out. It will be very, very difficult to sell the Zim story to a foreign institution at this point in time. I think that's why we haven't seen much in terms of listings on the VFX. A lot of work needs to be done there.
So lastly, again, affecting VFX, we've had an announcement from Treasury that they're looking to raise some hard currency there, some bonds. So given what you've just spoken to, is this realistic? Are they going to successfully be able to raise meaningful amounts of foreign currency by listing government paper on the VFX? Is there something that they know about interest in investing here that we don't?
I don't think so. I don't think there will be anyone who will be excited about picking up that paper. But I think I've got this suspicion that they are looking at the 1.7, $1.8 billion deposit, foreign currency deposit in the local nostro. And I think if you look at the last two announcements, the fiscal policy and also the monetary policy, they're making references that this deposit power has to be available to support local economic activity. So they can only be able to get this support or raise these foreign denominated instruments if they can use some sort of regulation of force or compelling those who are holding these deposits. Otherwise, I don't think people can make on their own without being compelled. They will be excited about buying a local paper. If you just go back, I mean, remember these TBs 2011, 2012, when they started issuing them, they were a US dollar denominated paper. What happened 5 years later, 10 years later? So
people are getting some dollars.
Exactly. So still people get Zim dollars for that. So it's actually risky for the depositors of these nostro balances, that at some point someone will just come and say, guys, okay, we are giving you these TBs. They are US dollar denominated. You take them. But you are rest assured that 2-3 years down the line, there will be Zim dollars and you lose value again, unfortunately.
On that note, that's all we have time for. Thank you so much for joining us. Please follow us on Twitter and like us on Facebook. And as always, we welcome your suggestions and comments. Cheers.